Good morning, everyone. Once again, this is Black Forest coming to you with another market breakdown. We're going to break down this chart. We're going to break down this currency pair. But before we get to breaking down this chart and this currency pair, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as a trader and that can help put some extra money in your pocket, especially in these hard, uncertain economic times. Okay. So with that being said, let's go ahead and dive into this chart and this currency pair. Okay. Now, before we get to talking about what is exactly happening on the chart, the technical analysis, let us discuss what is happening with each respective currency. Okay. Now, concerning the euro, let's talk about the euro first, and we'll talk about the USD. Concerning the euro, we've had a lot of economic news come out about the euro. And it's almost dead even between positive and negative news. We've had just as much negative news as we had positive news and vice versa. Just as much positive news as we had negative news as well. Okay. So with that being said, it's almost like dead even in the middle when it comes to its weakness. It's like kind of warm. It's not from a technical standpoint with its fundamentals. It's not so much strong. It's not so much weak. It's almost kind of dead even in the middle. But what's making it weak overall is the dark shadow clouds that hang over the entire European continent's economy. Okay, we have high gas prices, we have ever growing inflation. Okay, we have the reverse ripple effect of the sanctions that they're placing against Russia, having a negative effect on them. And on top of that, we have a destabilization of the entire European continent's economy, right? Continent's economy destabilization due to the FUD, the fear, uncertainty, and doubt that's surrounding it relating to the Russian Ukrainian incident. Now, we did start to see pickup in strength with the euro every time Russia and Ukraine started to have peace talks to try to come to some type of ceasefire or at least a halt in hostilities between the two respective nations. But every time we seem like the peace talks are starting to look positive, either Russia or Ukraine walks away from the table and then fighting continues. So as long as fighting continues and between Russia and Ukraine, we're going to continue to see a destabilization of the European continent and then of the European markets, which means that the major three European currencies, which is the euro, the CHF, and the British pound, is going to continue to get weak. Now, also, one thing we also do have to touch on before we move on are the sanctions that are being placed against Russia, okay? Because they're talking about placing more sanctions against Russia's goods, on its raw goods, and on its oil and natural gas to try to increase the squeeze on Russia that they think is happening. Okay, so they're going to try to put more sanctions on Russia good, Russia natural gas, and Russia oil to punish Russia for its invasion of Ukraine, but it's having a reverse negative ripple effect. Now, these sanctions are somewhat hurting Russia, but Russia is still able to make its money by trading its goods with countries like India, countries like China, Brazil, Venezuela, and North Korea, and several other different African nations. Okay, so they're still making money off their oil and their natural goods. They're just selling it pennies on a dollar, so they're getting something for it, and something's better than nothing. But this is more having a more drastic effect on Europe because this is having a more drastic effect on Europe because one of Russia's direct trading partners was the EU. So the EU used to get a lot of its gas, its oil, its natural resources like timber, metals, oil. I mean, no, excuse me, timber, rubber, metals, wheat. They used to get a lot of these things from Russia, but being that they've placed sanctions against these goods coming into their country, this is starting to have a negative effect on their economy because business owners and entities in that country that deals in utilizing these raw goods to make consumer materials are now having to look outside of the entire European continent for these raw goods. Okay, they have to look to Africa, they have to look to India, they have to look to the Middle East, which means that they have to pay higher prices for these goods. Okay, so them paying higher prices for these goods means that they have to in turn offset these higher prices by increasing consumer prices for these goods. Okay, also coupled with the high gas prices, that's having the same effect on high consumer now on inflation as well, and the high gas prices are lowering the ability for everyday working Europeans to have available money to be spending in the store. Okay, so with prices going up due to the lack of availability of raw goods, and also with the decrease in amount of spending money due to high gas prices, this is like a perfect storm for a full-blown recession. The European continent is going to be in a full-blown recession by at least midsummer. Okay. And it's very tough over here. I mean, we're having a drastic effect in America due with high gas prices, but what they're going through over there, it's very, very bad. Imagine what we're going through in times of by 10. That's what's happening in Europe. Okay. And this is why no matter how good the economic news is for the major three European currencies, until these dark clouds are away and we have resolution in the geopolitics, and the geopolitics stop affecting these economic indicators, we're going to see a continuation of the major three European continents currencies. Okay. So with that said, now let's shift over to discuss what's happening with the USD. The USD is gaining a lot of strength, a lot of traction, a lot of momentum. This is due to several different factors. We've had a lot of good economic news come out throughout this trading week about the USD. We have more good, we have more positive economic news than negative economic news that came out. We did have some economic news, but that negative economic news is being overshadowed by the positive economic news we had come out about the USD. We are starting to see a lowering of gas prices at the pumps, which means that consumers are starting to have more money to spend in the economy and having more money to spend in the stores, which means that the economy will grow as more money continue to go into the economy. The economy grows and the USD continues to get stronger. Okay. And we're starting to see that dark cloud of inflation that was also hanging over America as well. It is also starting to now start to shrink. Now we don't know how long this shrinking is going to be. Is this a temporary shrinking, or is this a sign for good things to come? We're going to have to play this out trading week by trading week. But for right now, we're starting to see it shrink. Okay. And this all means and equates to a strengthening of the US dollar, with the US dollar actually being one of our stronger currencies as we close out this trading week, going into next trading week, becoming one of our stronger currencies as well. Okay. So now, with all that said and all that good information knocked out the way, let's go ahead and discuss what is technically happening on the charts. Okay. So what's happening on the charts is that we were going down since the beginning of the invasion of between Russia and Ukraine, Russia invading Ukraine, and every time we've had peace talks, we've had three attempts at peace talks, and you can see it clearly reflected on the chart. Peace talks, no resolution, price drop. Peace talks, pick up in strength, no resolution, price drops. Peace talks, no resolution, and price is dropping. Okay. Now, the reason why price started to drop further out this range, because eventually we were in a range in which this is the up part of the range, this is the down part of the range, this is the upper extreme of the range, and this is the lower extreme of the range. Okay. And price was really staying between these ranges. The reason why we started to slide out of this range was simply due to an increasing of the weakening of the euro once that the Russians and Ukrainians walked away from that table. From the table of the peace talks that did not go back, fighting over in Ukraine, even though I know people are probably getting desensitized by the whole Russian Ukrainian news on the TV every day. But fighting in between Russia and Ukraine has actually become a lot much violent. Okay, and this is what started to bring that down. And also with that fighting, we're starting to see an increase in the growing of the dark cloud of the uncertainties that's surrounding the entire European continent's economy, and inflation is growing as well. Okay, and with all that, this is why we see a continuation of the weakening of the euro, coupled with the continued strengthening of the U.S. dollar. Prices are starting to slide towards the short side. Okay. So for the short to intermediate term, we are going to see a pickup in price. We can get as high as this area here or high as this area here before we start to range back out and slide back down. Okay. Or we can get to this area here if the euro starts to get drastically much weaker and the USD starts to get much stronger than what it currently is now. We could just see a pickup to this area here range and then continue to slide back down. Okay, so what we're looking at is, there's my cursor. What we're looking at here is a pickup in price to either here, this area here, or this area here before it ranges out to continue to go back towards the short side. Okay, now you can place buys for the long position, but that's going to be more reflective of retracement than any type of price turnover. Price won't turn over until we have clear economic indicators that will tell us prices turning over due to the change in fundamentals of each currency. And that's not going to happen until we have a current change of our geopolitics. As long as geopolitics stay what they are, we are going to have some retracement up before we place the before the sales in the short position start coming in. I would strongly advise wait for the retracement to come in and then go with the fundamental direction as opposed to just technically trying to just make money off the retracement. Okay, I mean, you could do that too if you know when to get out. But the thing about retracement is that we never know when price is going to immediately turn back over. Okay. So best thing to do is always trade with the fundamentals, trade with the trend and not against the trend. Okay. So we're going to either have it pick up to this area here, or this area here before we range out and slide back down towards the short position, actually getting even lower than both these current market structures going into this price direction here. Okay. Hope that information was helpful for you guys. Happy trading.